Hey everyone, I'm Dylan with Traditional Realty Group, and I'm with,
Camille from New American Funding.
and we're bringing you this week's housing and mortgage update so you know what's happening right now and what to expect as we're heading into the fall and holiday season. So let's start at the big picture. The Federal Reserve cut interest rates down to 4.25% last week, and mortgage rates reacted right away. The average 30% fixed has dipped into the low 6.3% range, and the best we've seen in months and really all year, right?
Yes,
Very
all
good.
year.
At the same time, consumer spending is still strong, which means the economy is still holding steady without overheating. And if inflation is not going up dramatically, which is still positive. And that sets the stage for a balanced market this fall. So, a quick snapshot of housing. In housing, new home sales jumped up 20% last month, thanks to an aggressive building incentives like buydowns and closing cost credits. Meanwhile, existing home sales stayed flat, but inventory is running high. Buyers now have more options to choose from, which means sellers have to compete harder on price and presentation. National price index are showing stable and slightly soft prices, and here in Houston, high supply is giving buyers a lot more negotiating power, um, and they're really choosier. Are you seeing that with your clients as well in regards to the buy
Absolutely.
side?
Absolutely. So, Dylan, on the lending side, since you're asking, here is what we're seeing. Mortgage applications went up by about 30%,
Okay.
right? Over over the last week since the Fed announced the rate cuts.
Yep.
And the to my surprise, the refinance applications nearly doubled from from a low, right?
Yeah,
But
exactly.
you're seeing refinance requests. We're running numbers. And now we're seeing that it's a go.
Okay.
So the average 30-year rate is hovering around 6.3%. And if you combine that with buy down programs, permanent or temporary, buyers can sometimes see effective rates in the 5%.
Okay.
So, uh, to add a layer, that's conventional. If you're going with FHA or VA buyers, they are specially positioned right now because these programs have particularly lower rates, so they're seeing even stronger affordability gains.
Well, that's great.
Yes. So if inflation keeps trending lower, we may see rates move closer to the sixes. That will depend a lot on somewhat. I won't say a lot, okay, it depends somewhat on the Fed's decision in December.
In the next cycle. Okay.
Yeah.
One thing that we're also keeping an eye on is the risk of federal government shutdown. If Congress doesn't pass a funding and housing could be affected and see this ripple effect all through the economy. So that's something we're kind of keeping an eye on.
That's exactly right. In past shutdowns, we've seen delays in FHA, VA, and USDA. For whoever is not familiar, USDA is rural. So in the loan processing for those USDA, VA, and FHA, potential pauses in new flood insurance. So
Okay.
flood insurance is subsidized by FEMA. Those
Yep.
policies are subsidized by FEMA, and even IRS tax transcripts, where lenders need typically need for verifying income,
Okay. Yeah.
especially on self-employed. But to keep it general, when the IRS slows down, the loan slows down. So even a short shutdown can create hiccups
Yes.
in closing timelines, and a longer one could shake the buyer confidence further.
And as we know, this seems to be like a reoccurring problem every year and every year. So we'll let the circus sort things out, and I'm sure we shouldn't have any problems, but it's just something to keep an eye on if it lingers. So, if you're planning a move this fall, the best advice we could give you is start the process early. Lock in your rates, get your documents ready, and build in a little bit of flexibility when it comes to your timeline. That way, you're prepared no matter what happens in DC. So, what does that mean for you? Let's look at buyers, sellers, and investors. With buyers, we want the lower rates and inventory we're seeing is higher. Buyers finally have both affordability option as well as builder incentives and seller incentives. We were talking about that with some of the listings that we're seeing. And your monthly payments could look very different than it did earlier in the summer and especially earlier in the year.
Well, step one is updating your pre-approval.
Yes,
We're helping clients lock rates with float down options, so you're protected if your rates improve further.
most certainly.
So you can lock and shop.
Okay,
Yep.
that's good. And then on the seller side, high inventory means more competition. Sharp pricing and strong marketing is essential in this type of market. Homes priced right and paired with concessions like a 2-to-1 buy down are still moving. And also, buyers are having more choices right now, so it's best to be sharp and staying competitive. On the investor side, more inventory equals more negotiating room. Rental demand is still solid, so now's a good time to lock in your cash flow deals, especially with year-end tax strategies in play. And as we look with our builders, for our builder partners in a high inventory market, incentives are what sets you apart. Keeping the buy downs, closing costs help, also facilitating quick move-in options really keep you front and center with the modern buyers because they're so choosy.
Exactly.
Mm-hmm.
When buyers see the actual monthly payments after
Yeah,
incentives and rate buy downs, it shifts the conversation completely. We
very good.
can we can co-brand those numbers to help get buyers off the fence if you are sitting on a listing that you want to sell. We can.
That's exactly
That's
right.
yeah.
Perfect. So here's the bottom line. Rates are easing and buyers are coming back. Inventory is high, so sellers must stay sharp. And builders are leaning into incentives. The wild card here is potentially the government shutdown, which could cause delays, but planning ahead keeps you well protected. And additionally, watching what the Fed does too, so you can take advantage of it. And really, what I see right now is between now and next spring is some of the best opportunities for buyers and investors. Would you agree?
Well, if you totally agree, if you're thinking of buying, selling, or refinancing, now is the time.
Very good.
So let's start this conversation, whether it's to update your pre-approval again, explore incentives,
Okay.
or run payment scenarios, real simulations. We're here to help.
That's exactly right. I'm Dylan with Tradition Realty Group.
And I'm Camille with New American Funding.
Thanks so much for watching, and we'll see you next time with another market update. Enjoy, everyone.
Take care.